Calgary prices seem to be flattening out, and some people think that this might be a start of a downturn. I'm not one of those people, but I'm gonna tell you what I'm seeing in the market and why we've seen things flatten out. Calgary continues to be one of the most affordable large metros in North America, and that's a big draw for people. We saw a record-breaking migration to this city with almost 41,000 people moving here Q4 of last year. But the big question on everyone's mind is, are prices going to correct? This market is tough, especially if you're a buyer in the sub 700 range. Interest rates are at the forefront of every conversation that I have with clients. I had predicted this just a few months ago. My prediction is that we're going to be 0.75 to 1% lower than we are today. And I still stand by it. Here's Ben Rabideau's prediction, and I completely agree. We're expecting several more rate drops this year because the economy is hurting, which could see continued pressure on Calgary supply. And if you want more information on rates and rate expectations, we're going to be launching that video very soon. Let's talk affordability, or the lack thereof. When we look at household income needed to cover the cost of home ownership, Vancouver is at an insane 106% and Toronto is almost 85%. That's just not attainable for most Canadians unless you're okay with being in a lot of debt. Between July of 2022 and June of 2023, almost 37,000 British Columbians chose Alberta as their new home. This migration has definitely affected our inventory levels and prices. We haven't seen spring conditions this tight since 2006. Calgary has been a seller's market for the last 3 years straight. So for the month of June, total sales were down almost 10% versus last June. New inventory was slightly up, just over 3%. Active listings increased by 5%, but the average sale prices increased by 13% year over year. And year to date, everything is essentially up except for days on market, which is almost down 20% to only 22 days on market. Data aside, we have seen a shift, and a lot of that has to do with the attitude of the sellers. Sellers are testing prices higher and higher, and this is the first time in probably about 3 years that we're seeing homes sitting on the market in the 600s and 700s that are just priced too aggressively. Prices aren't coming down, but buyers also aren't as motivated because rates are supposed to be coming down, and unless the home is priced well, shows well, and the sellers are reasonable, the home is just gonna sit. I think this is actually a good thing, and on a lot of these market update videos, we see comments talking about how realtors want prices to go higher and higher and how we want to create FOMO, but those people typically don't understand the business and often struggle to even put their socks on in the morning. A hot market doesn't only just put stress on the consumer, on the buyer and the seller, it puts stress on the entire industry. And as a realtor and someone on a team, it's not just the consumer that suffers. I like that we're seeing a balancing in the market because it's healthy. Markets need rebalancing, and Calgary's real estate market was flat over 6 years, and it was just a matter of time before we saw prices increase. All right, quick pause on this video. Listen, before I say anything, this isn't coming from me, this is coming from the entire team. We need more subs. A lot of our viewers are still not subscribed, so please like, share, and comment below on the type of content that you'd like to see next. So what can we expect for the rest of the year? In short, more of the same. Interest rates are looking like they're going to continue to come down, but inventory is keeping a lot of buyers on the sidelines, even here in Calgary. The cycle that we're seeing is sellers don't want to move because inventory is so low and they have nowhere to go. Inventory remains low because sellers don't want to sell. Prices get pushed up due to the population growth and low inventory because we're still an affordable market compared to the rest of Canada. So the seller can't or won't sell, and the population keeps going up and the rates are finally coming down. So prices should continue to go up, but I don't think that we're going to continue to see any surges like we have seen in the past. We're going to continue seeing our sub 600,000 market segment gain traction and probably have the highest level of appreciation. We expect our affordable condos, townhouses, and duplexes to continue to go up in price, especially if the rates stay above 4%. The average Calgary household income is $140,000, and that's what you need to make to buy a home priced around $600,000. For the past few years, we have become less and less affordable. The average detached home back in March of 2019 sold at $526,000. Compared to March of 2024, where we saw the average detached home sell for over $800,000. Unfortunately, I don't see these things changing anytime soon. As we enter peak listing season, inventory levels usually double or triple. This year is going to be different. Unless we see a complete economic breakdown or rates drop over 30%, Alberta will continue to lead in growth and housing appreciation. Let's zoom out a bit and take a look at some macroeconomic factors from the recent Edge report that are influencing Calgary's market. Firstly, Bank of Canada is signaling more and more rate cuts this year despite fears over a weak currency. We're expecting cuts almost every single meeting for the rest of the year. This could also provide some relief for buyers, but it also means that any improvement in affordability may be short-lived because demand could surge with lower rates. Canada's population growth set a fresh record in Q2, but there's signs of topping out. The rapid growth has put significant pressure on our housing supply. Building permits saw a head fake surge last month, but construction activity is expected to slow sharply across Canada. This means that limited supply situation is likely to persist, keeping prices elevated. Mortgage interest costs have been reweighted in the new CPI basket by Stats Canada, now taking up a much larger share. This means reported inflation may appear to fall quicker, but this gives Bank of Canada more confidence to cut rates. Lower rates, though, could spur more buying activity, further tightening our market. The resale inventory levels are rising in places like Ontario and BC, but Calgary, we've seen a different trend. Despite national trends, Alberta saw active listings rise slightly, but we're still not back to normal levels. This is a regional variance and really underscores Calgary because we're still a seller's market. Consumer confidence has improved with household net worth hitting record highs and sentiment on the rise. The optimism could translate into more buyers entering the market, which would sustain the upward pressures on prices. So why have prices in Calgary seemingly flattened out? Well, it boils down to a few factors. Supply constraints. Despite an increase in listings, the supply remains tight. Sellers are reluctant to list due to high prices and limited buying options elsewhere. Interest rates. Even though rates are expected to drop, they're still relatively high, keeping a lot of buyers on the sidelines. Even though Calgary is one of the most affordable large metros in North America, there still are a lot of economic uncertainties, and cost of living adjustments are making buyers more and more cautious. So while population growth has driven demand, it's also reaching a point of saturation, slowing down the explosive prices we've seen across Canada. But Calgary still is gaining 270 residents per day. It's true that Calgary has been volatile and will probably continue to be until we see some more economic diversity. But until we see negative population growth, mass layoffs, or inventory surge, we're expecting home prices to continue to see slow growth.